And good morning, good evening, good afternoon, traders and students all around the world. This is FXPassion broadcasting you live on YouTube. Just give me a second, everybody. Just a second. There you go. Everybody, this is Forex Trading Course 101. And remember, we are going to build the three pillars, right? Pillar number one is the strategy and or system that is easy for you to understand and easy to obey. Number two is the risk management one. We are learning about risk management and how this works in our strategy and in our system, right? And the big one, the psychology part, and we are learning how psychology works in our risk management and in our strategy and our system. Hello Miguel, hello Ram, hello Salbakti, hello Annie, hello Zuelius, hello Christian. Salbakti, I send you a message on Skype for tomorrow, okay? And talking about psychology, right? What do champion beginner traders say, everybody? Champion beginner traders say, I am not going to live and die on a trade by trade basis, And talking about psychology, everybody, I post my own quote here, and it's go like this. When the market scares the hell out of you, don't be afraid to do the right thing. Okay, so it's me and Mark Douglas right now talking about quotes, and everybody, if this is your first time and you don't understand what is happening, we are in the intermediate module. We are passed over the basic and the beginner module, and if things get too complicated, everybody, please go back on Ducascope YouTube webinar page and start to watch the lesson starting from the basic module, like what is market structure. Hello Ram. Yes sir, thank you, have answered. Okay, great. And remember everybody, 90% of traders lose money in the Forex market worldwide, and the webinars are not trading or investment advice. The webinars are for educational purposes only. Either way, you should invest money. You shouldn't invest money that you cannot afford to lose. And for homeworks or questions, you have my Gmail contact, my Skype contact, and my LinkedIn contact. That being said, everybody, let's dive to the charts, and we're going to talk about how to adjust the Contrarian Fibonacci in a downtrend. Before doing this, just quickly, let's recap the rules. Let's recap. Let's recap the rules, right? The original Fibonacci. Number one, we use the original Fibonacci to determine trend direction. Number two, we then compare trend direction from the larger time frame to the lower time frame. And the last thing, we need to identify in what zone are the Fibonacci's on the larger time frame and on the smaller time frame. This is what we learned so far about the original one. So if we open, everybody, how to adjust the contour in a downtrend. Okay, let's open NZD-CAD. NZD-CAD, everybody, it's a pair to monitor because we are expecting a structural reversal. Okay, I don't have the crystal ball, but we are expecting a structural reversal. And so, as the picture is saying, number one, determine the direction, then compare the larger time frames with the smaller time frames, right? So, if you go on the monthly chart, we are going to see that our original Fibonacci is down, and this is how your chart should look like, right? I mean, I can delete the indicators because we are not there yet, but this is how your chart should look like. We have a down Fibonacci with past resistance, support and pivot point, right? And the market is here. So is a Fibonacci in a deep retracement or extension? And the answer is Fibonacci theory. Long term we are in a Fibonacci extension, you know. And let's color code this like this, and maybe transparency, and what color? Green, right? Maybe not blue. Violet color, there you go. So we have a down Fibonacci, original one, right? And in what area of the Fibonacci are we? We are in a down extension. Talking about NZ decade, monthly chart, and yes, the market is retracing up, but it doesn't matter, because until it breaks the C, and if it's going to break the C, until it breaks the C, this is a down retracement. Talking about the Fibonacci sequence. Okay, then we are going to go on the weekly chart, because we need to compare the charts. So on the smaller time frame is most likely the same, right? We have a down Fibonacci, we have the A, the B, A, B, C, and again our Fibonacci, what is the market doing according to the Fibonacci? It's in a down extension, right? Oh, but the market is going up. Yes, but I'm not talking about the market, I'm talking about the Fibonacci sequence right now. Are these support or resistance areas from monthly only? Yes sir, just from the monthly, but I have the same support and resistance levels on every time frame. Okay everybody, so we have a down retracement from the market, but we are in a down extension on the monthly Fibonacci, and we are in a down extension on the weekly Fibonacci, and we are here right now. Now let's go on the daily, let's see what the daily is saying. We're going to compress the chart. This is from the previous lessons. And as you can see everybody, yes, we have the confirmed C, but from the previous lessons this is our... Let's go step by step, okay? Now we have the original Fibonacci again pointing down, right? And also on the daily chart, right, we are in a down extension. Okay, talking about the Fibonacci. Okay, so this is one. We have 3 time frames pointing in the same area, right? And because we are in an extension, talking about the Fibonacci, not the market, we are expecting a reversal because of the long-term downtrend line, right? And again, this week we are going to get another news out of Canada, so maybe the market is going to push down finally, you know. And what we also know that we have some more space, right? You know, until somewhere up in here, you know. So maybe the market can push higher and find this level of past resistance, you know. Either way, we are at the key levels, technical key levels, if you want. Talking about the NZ decade monthly chart and the weekly chart. Weekly originally Fibonacci was hit. Everybody, it depends on what time zone are you going to use on your charts values, okay? Everybody, if you are on J4X, you go on settings and preferences and chart. And if you have a different time zone, I don't know, you may UTC, GMT, Eastern Standard Time, Eastern Daylight Time, Western Daylight Time, you know, Brazilian Time, New Zealand Time, Asia Time. You have all these different time zones, okay? And different time zones, values are going to show you different candles. And this is why it's going to maybe to happen that, yeah, I know, I'm not talking about me, but it's going to happen that in some charts you are going to have a different, on some chart it's going to happen that your D was hit, in some charts your D is not going to be hit, you know. Okay, now no, but it's on your chart, so let's go step by step, right? Fibonacci retracement 1 2 3 4 5, this was 1, this was the original one. Let's change colors, and green goes to green, so this was the Fibonacci retracement, this was the second one, right? And green goes to green, and there you go, Zuelius, you are right, thank you. We have a new Fibonacci, so ABC, right? A, B goes down here. ABC, we're going to delete the previous one, delete, previous one, delete. Okay. You were talking of key levels based on demand supply. Is that necessary for Fibonacci based trading? Do you practice that, sir? Answer: yes. I suggest if you are going to follow Passion, you set your chart identical to this. Thank you, Eddington. Now everybody, thank you, Zuelius. Now what changed, alright? What changed? Well, the Fibonacci on the, thank you, Zuelius, thank you very much. On the monthly, the Fibonacci is down and we are in a down extension. But on the weekly, we are still down, right? But we are not in an extension yet. Why not? Because the market, it's still running up, and we can draw a contrarian Fibonacci, and this is going to be the first one on the weekly. Let's change levels, and the market hit already the contrarian Fibonacci. The market hit the extension of the contrarian one. Okay, so this is going to be our C up in here. Thank you, Zuelius. You helped me a lot today. Okay, so those are two different areas. When you graduate, you can do what you want, but until then, that's correct. That's correct. Until you graduate, you know. Now, but on the daily chart, everybody. On the daily chart we have the C already, and the trend has left the building, so we have a down, we are in a down extension, but nonetheless we are here right now. We are here right now, right? Okay, so this is what is about the original Fibonacci, and a rule for high probability trades: we should always enter in extensions in the same direction. All the other trades are low probability trades. So everybody, if the market, now this is how Fibonacci works. It's nothing special, it's just an upgrade of what you already know. If the market is going to make a bearish weekly candle, does this means that we are in an extension on the Fibonacci on the weekly chart? Yes or no, everybody? Yes or no, everybody? If the market is going to push down because we are at the technical key level, maybe, we don't know, right? We don't have the crystal ball, but we can make a plan. We have our strategies in place, and I don't remember if it's Tuesday or Wednesday. We have the news from Canada, and if the market is going to push down like this the whole week, you know, oh man, we are going to short the market. Yes, we are going to short the market, but talking about Fibonacci probabilities, you know, are we in an extension just because a weekly candle is bearish, or are we still in a retracement? And this is what you must learn in the Forex course 101 before you enter the Forex course 202. Because this is going to make all the difference, you know. Because the market, just because, I don't know, it doesn't matter, right? But the market is going to push down and is going to hit this pivot point, which equals past resistance. And from here, you must make a decision as a trader. Is the market most likely going to do this according to the Fibonacci's, or is the market most likely going to continue its path down? Namaste Patak, how are you? What do you think, everybody? Talking about just the weekly chart, you know. The rule is stating, it's a rule. For high probability trades, we should always enter in extensions and in the same direction, and we are talking just about the original Fibonacci. It's kind of a recap today, okay? So on the monthly, yes, we are down and we are still in an extension. On the daily, yes, we are down, and even though the market is pushing up, we are still in an extension. What about the weekly? What about the weekly? If the market is going to push down for the entire week or two, maybe, we don't know, right? And is going to hit past resistance, does this mean, is this enough to say that, well, our weekly Fibonacci is an extension, yes or no? Salbakti, you are correct, but it's not because of the counter trend line. It's not about... So Fibonacci is nothing more than an upgrade, everybody, from market structure and the market wave. What is going to define extension and retracement and another extension in an uptrend? Just an example. What it defines extension, retracement, extension? What defines the market wave, everybody? This is one of the first lessons, you know. You need to understand this before you understand the Fibonacci. Yes, we can short at this level. If not, we would not be even trying to find the confirmed C if the weekly chart for a downtrend. Ram, you are correct, but my question is a different one. Everybody, don't mix apples with bananas. The question is, it's a technical question, it's a yes or no question, everybody. If the market gives you a weekly bearish candle, does this mean that the weekly Fibonacci is in an extension? It's a yes or no question. Everybody, all of you are correct, but the question is a different one. If the market shows you a weekly bearish candle, does this mean that the weekly chart is in an extension, or it started an extension according to the Fibonacci? It's a yes or no? Yes, Albakti, change in the short-term trend. So, what's the answer? What's the answer, everybody? No. No. Anybody else? Zuelio says no. Christian says no. FX campaigner, man. What about you? You are in the Forex course 202. You should know these things. Miguel, yes, if it breaks previous structure. Salbakti, no. Congratulations everybody, all of you are right. So, no. And if the answer is no, now this is what you are learning here in the Forex course 101, everybody. And if the answer is no, is this should I plan my short trade as a number one long term short or number two short term short? Everybody? If the answer is no, 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 yes, if it breaks previous structure, no, we must make for a change in short-term trend. Rem says yes, the C is not confirmed. Zuelius, don't mix apple with bananas. We are not talking about if the C is confirmed or not. We are talking about a key level, technical key level, and we are talking that we are learning how to play chess with the market. And all of you said correctly, no, if the market is going to show me just one weekly bearish candle, this is not an extension on the Fibonacci weekly chart. And you are correct, everybody. And if this is not an extension yet, not yet, maybe in the coming weeks, you know, of course, if the market is going to push down, maybe it's going to push up, right? But if it's going to fall like this, should I plan my short trade as a long-term short or short-term short? Everybody? And because I have a 20 seconds delay, everybody, and I'm waiting for your answers, just quickly, some of you send me emails. Oh, Passion, why did you cancel me or take me out of the coffee with Passion on Skype? Come on, everybody, you know, don't think so low about yourself, you know. Oh, Passion, did I do something wrong? Did I do anything wrong? No, come on, man. Everybody, don't think that low about yourself, you know. All of you are great men, great persons, you know. It's just that it doesn't make any sense, you know. You've been to the conversation, you've been to the meeting, then next, you know, we're going to give space to others, okay? No, come on, nothing personal, of course not. Don't think so low about yourself, everybody. You know? Oh, are you angry with me? No. You know? Nothing personal, but you've been to the meetings, you ask your questions, then. Okay, Rem, we should plan for a short trade for short term as the level is 3282 Fibo level. Rem, you are correct. It's going to be a short term short trade. Patak, short term short, yes sir. Any short term short, short term short. Long term short, no. No FX campaigner. Man, I'm going to, you know, one more Victor and you are going to back to 101. One more of this one and you are out of the 202, my friend, and you are going back to the 101. Everybody, Victor, come to my office, please. This is a short-term short. This is what you should plan. It's not a long-term short. Christian, I know you must do, right, with Victor? Right, Christian? Christian, take a brick or a baseball stick and go to visit Victor, you know. You know what you should do, Christian? No, everybody, it's a short-term short, you know. It's too soon, everybody, to plan. It's too soon. Everybody, it's too soon to plan a long-term short. And all of you are correct. It's not enough a counter trend line break, everybody, and it has nothing to do with the confirmed C. What is showing you that the change, what is showing you that the extension started, it's the change in the short-term trend. Period. End of conversation. Christian says yes. I want to see this, okay? Send me a video, Christian. So everybody, what is going to signal you that it's end of the retracement and start of the extension is the change in the short-term trend. You know? And Fibonacci is a sequence. This is what we've been clarifying to you. Don't mix this price action with these Fibonacci levels. The train has left the building here. The train, not the train, Elvis has left the building, right? But the train has left the station. And what is going to show you, if you're in extension, retracement extension, is the market wave, is the market structure, you know, you are going to use the same principles, you know. Why always looking for more? No. You are going to, Christian is going to visit you with the brick and the baseball stick. Both of them. Don't come out now, no, yes, but I know, but I was thinking, no. You need to come to the office, Victor. Sir, when you say short-term short, can we project for the 161N level? The answer is yes, you can project. Thank you, Ram, for the question, everybody. So, thank you, Ram. Everybody, what is the difference between a long-term short and short-term short? Who knows? This is what you should learn before you go to the Forex course 202. Don't even come close if you don't understand and know this stuff. What is the difference? So, Rem is asking, can we project that the market is going to go until the 1618? The answer is absolutely yes. Why not? You can project this one, you know. But what is the difference when you projecting as a long-term short and when you are projecting as a short-term short? Everybody, what's the difference? It's the same. Oh, no, it's not. It's exactly the opposite. It's not the same. There is a there is a huge difference in how you plan your long-term short and the short-term short. Where's the difference, everybody? Those are going to be two totally different rates. Risk ratio, yes, but more specifically, everybody. More specifically, you have two traders are going to enter. Okay, I'm going to help you a little bit, alright? You have two traders entering at the same level, let's say somewhere in here, and this is going to be green like that. One is planning a long-term short, the other one is planning a short-term short, and both of them, just an example, are going to have the stop loss up in here. Both of them, right? Now, if they entered at the same level and if the stop loss at the same level, what's the core difference? Let's use the word core. What's the core difference? Time frame, no sir. C is not confirmed and we are still in retracement. We are not talking about the C patak, but thank you for the comment. Everybody, this is where 101 traders lose money and the 202 traders are not. Do not. Sorry for my English. Understanding, this is just a small part, right? Understanding the difference between the long-term short and the short-term short is where 101 traders lose money and the 202 traders do not. What's the core difference between those two trades? They entered at the same level, you know, and they entered here. Vincent, long-term short trade with structure, don't structure, short-term short with short-term trend. Yes, but you are together with Christian. Hello MHB. What is the more specific answer? Long-term short, I take position. In short-term, I may not take position. Yes. Everybody, bring together the three of you. And what is this called? What is this called when you have a different risk ratio? What is called that you have a different structure and short-term trend? And what is called this when you big picture, small picture? Yes. Bring this together too with everybody else. What's the core difference? You are almost there, everybody. If you put together all of this, yes, it's already Vincent, all these values. If you put all of this together, what is this called? Same entry, same stop loss level, but different what? Differences. What is going to be different? Everybody? Okay, I'm going to wait for 5 more seconds. Okay, maybe somebody is going to... All of you, right? Okay, congratulations to you. But I'm looking at a specific word, you know, 2 words. What is this called? When you put all of this together, 5, 4. Give us a clue, sir. No clue. Everybody, all of you, right? Okay. I'm going to just use a different word. Trade management. Trade management is going to be totally different. Okay, trade management. Stories, no Vincent. Vincent, mindset, yes. Trade management. Vincent, we have a call 30 minutes after the webinar, okay? Don't forget about this, Vincent. We're going to have a Skype call 30 minutes after the webinar, Vincent. Different psychology also, yes, strategy. Trade management, everybody, yes, yes. This is the core difference on how 2 different traders, it doesn't even matter the strategy. You could have the same strategy or different strategy, but they are going to enter the same level, have the same stop loss, but how are they going to manage their trades are going to be totally different. And this is where 101 traders lose money and 202 do not. Victor, come to my office, please. You know. So trade management, you know, because Passion, can you give an example? Of course. So talking about cancel and replace, right? Cancel and replace. The short-term trade are going to the short-term. That just an example. The trader who planned the short-term trade are going to micromanage this trade because he knows or she knows that the take profit level is going to be somewhere in here. The long-term trader will not do this because he's not interested. And if you say to me, oh yes, but I would do this, then you are not talking about the long term. Because long-term trades and short-term trades have its own rules and its own concepts, you know, and we are on the weekly chart, right? So don't come to my office, everybody, if you are telling me, you know, oh, I would micromanage my long term. This is not a long term, this is a short term. A long term trader would wait for the market to what? broke maybe this level. It's not even a low, but it would wait, you know, to break this low on the weekly chart, and then would wait for the market to retrace. This is a long-term trade on the weekly chart. Trade management, everybody, is the core reason that is going to be different. Miguel said it, congratulations. Yes, Miguel. Vincent, yes. Albakti, Miguel said it. Yes, Miguel. Thank you, Miguel. Okay. Clear, right? Now, the Contrarian Fibonacci. We are going to use the Contrarian Fibonacci to, number one, trade retracements and to find the C of the original one. Trading rules. Until the D extension of the Contrarian Fibonacci is still inside the AB boundary of the original Fibonacci, you are entering trades with a probability of 50-50. If you can find a Contrarian Fibonacci with the projected D extension above or below the A of the original Fibonacci, you are entering an 80 to 85 probability trades. When you find the C, your stop loss should go 10 to 100 pips above or below the A of the original one, and your take profit should go 10 to 100 pips below or above the D of the original Fibonacci. When you find the C, you should check the trend direction from the larger time frame and compare it to the lower time frame prior to entering the trade. Thank you, Ram. Okay, so we are on the daily chart, right? And we are here. The market, we are here right now. I'm going to delete this one. The market hit the sub D. We have a high. We have a high up in here. We have a new sub A, sub B. So sub B, it's up in here. Sub C is going to be somewhere in here, and sub A is going to be somewhere in here. And let's compress. The market found already the C, but we have another Contrarian Fibonacci. So this is the trade, everybody, that we can take, or we would take, if we talk about retracement trading, right? But the C is up in here. The C is up in here, not confirmed yet, as we saw on Friday, right? If I recall correctly, the C is not confirmed, you know, and we are here right now. One thing, everybody, that we should always remember, between the Fibonacci and the long-term trend line and structure, you know, between those three, who is stronger? Who is stronger? Everybody, don't, I'm telling you, because I know some of you, don't short the market yet. Don't short the market yet. It's not the time yet. But we are at the technical key levels. We have the long-term general downtrend line. We are at the pivot point, you know. Between the down Fibonacci and market structure and the downtrend line, who is stronger? And what does this mean, right? What does this mean, that one is stronger than the other? So, extension, retracement, extension, retracement, extension, retracement, extension. Everybody, you have the Fibonacci, original one, you have the long-term general downtrend line, and you have market structure. Who is the strongest, and what does this mean? And how are you going to plan your trades, you know? Structure, trend line, structure, yes sir. No, Christian, no, not the trend line, structure is the strongest. What does this mean? This means that we are waiting for a structural reversal, you know, And yes, we have a lot of convergences, you know. Oh, we're past resistance, we're at the pivot point, we're at the long-term downtrend line, but this does not mean, everybody, that the market cannot push up until this level. This is the last edge, this is the last area. This pivot point, this structure high is the last area of the structural reversal. So don't short the market yet like crazy, you know. Oh, but it's a keep, you know, it doesn't matter, the market can still push up. We don't know, we don't have the crystal ball. So the market can break the long-term downtrend line and the structure is still valid, you know. As Vincent said, the story, what story are we trading, it's still valid, you know. So this is the last area, and if the market breaks the structural high, then we have a change in structure. And we need to change all kind of things, you know, all kind of concepts, of rules, you know. We need to reverse our Fibonacci trading, we need to reverse our structure trading, we need to reverse everything, right? Okay. Going back to the picture, if you can find the Contrarian Fibonacci with the projected extension above below the A, you are entering the 80 to 55, right? Number 3, when you find the C, we talk about stop loss, take profit. Number 4, when you find the C, you should check the trend direction from the larger time frame. So this is the daily chart, right? This is the daily chart, and we have the original Fibonacci, we have the Contrarian Fibonacci. Now we are going to open the 2-hour chart. 2-hour chart. Let's delete the indicators, we are not there yet. Delete, delete, delete. 2-hour chart, right? Just quickly, everybody, right? I'm going to, hopefully I'm not going to do any mistakes. So let's change colors. Original one, there you go. So red goes to red, red goes to red, red goes to red, and disable. Red goes to red. Red goes to red, this is here, so my Fibonacci is going to be, this is going to be the A. Let me see where is the first high. This is going to be the B. Now we're going to compress the chart. Oh, we are here already. Did I do any mistakes? Let me check the 4-hour chart, everybody. 4-hour chart, I cannot read anything, and I'm going to delete, and I'm going to use our 8-hour chart. Let me send the 8-hour chart. No, that's it. Okay, so let's go back on the 2-hour chart first. Just quickly. And on the 2-hour chart, everybody, red goes to red, right? And this is the chart. On the 2-hour chart, we have the A, the B, the C, and the D. And what does the picture say? Number 4, when you find the C, you should check the trend direction from the larger time frame and compare it to the lower time frame prior to entering the trade. So what does this mean? This means that if the market, you know, and if and before, right? This is the 2-hour chart. If the market is going to make relevant the first 2, right? And we're talking about the market wave. When the market is going to make the first 2 relevant lower lows and lower highs, lower lows and lower highs, before we are going to short the market, because of everything we just talked about, before we are going to short the market, we should do what? It's the same, everybody, it's the same question when we checked daily and the daily and weekly, right? If the market is going to fall and is going to make the first two relevant lower lows, lower highs, should we just blindly enter on the 2-hour chart, or should we check the short-term trend on the daily? What should we do? What should we do, everybody? Should we wait? Should we check the daily? What level should we check? Passion, can I enter the market? Yes, you can, you can do anything you want. But different entries are going to have different probabilities because of different convergences, Everybody, let's write this down, okay? And print it out and glue it to your computer or screen. Different entries are going to have different probabilities because of different convergences. And yes, you can start writing your book, everybody. Let's write this down and print it out and glue it to your screen, to your monitor. And read this sentence every day in the morning and one before you go to sleep. And before you enter a trade. Different entries are going to have different probabilities because of different convergences. What does this mean? This means that it's a structural reversal trade, so it's the same if I'm going to use the quadrant this time, everybody. Okay, let's delete this one, so you could be thinking, oh, I'm on the 1-hour chart, 2-hour chart, 4-hour chart, so because it's a structural trade, I'm going to enter here, or I'm going to enter maybe here, it doesn't matter, or if the market is going to fall, I'm going to enter here, because it's a structural trade, right? So it doesn't really matter where I enter, right? No. Different entries are going to have different probabilities because of different convergences. It's not the same. Come on, if this would be all the same, everybody would be a millionaire, already. If it was that easy, right? It's not the same. And this is why, everybody, we are teaching you. Yes, most likely we don't have the crystal ball, the market's going to reverse, it's just a matter of time. But timing, it's a critical point, it's a critical part of trading. So you cannot just blindly jump into a trade, oh my gosh, the market is making lower lows, lower highs, and its structure. And the answer is no, you should check, You should check the daily, as that is what the rules. Yes, thank you, Ram. And you need to know So in the end, everybody, in conclusion, let's say that the market made 2 lower lows, 2 lower highs, relevant one, and you see 2 bearish candles on the daily. Is this going to be, Victor, come to my office? Is your trade on the 2-hour chart is going to be a short-term trade or a long-term trade? Everybody? You could have 8 swings, everybody. This is what is difficult in the 101, right? We are trying to make sense out of the market and price action and everything. And we are mixing apples with bananas, which is normal. I could have 6, 7, 8 swings in the 2-hour chart. Okay? And I'm entering into a trade and talking about NZD CAD right now. Is this trade on the 2-hour chart, even though you have 8 swings already, is this trade going to be short term or long term short? Everybody, what do you think? It's going to be a long-term short on the 2-hour chart, not the daily, not the weekly, not the monthly. On the 2-hour chart, is it going to be a long-term short or a short-term short? Everybody? And I have a 20 seconds delay on the chat. In the meantime, everybody, I send a message to some of you. We are going to have a call at 1:30 my time, you know, I mean in about 30 minutes after we end the webinar. Was my greed my bad? Short term short. Thank you, Victor. You know, yes, everybody, greed and fear, right? Fear and greed. Short term short. Anybody else? The 2-hour chart, yes sir. Short term short, but as you said, it depends on the trade management. Yes sir, short term short, great. But please to the office, no, this will reduce my bonus. What bonus, man? What bonus? What bonus? No. Junior trader has no bonus, everybody. No. What bonus? The bonus, yes. I have here a brick and a baseball stick as a bonus, you know. Short term. Hello, Anis, how are you? Congratulations, everybody. Please watch this webinar in particular 3 or 4 times. If you are a beginner trader, everybody, watch this webinar 3 or 4. The same webinar? Yes, the same webinar. There is, today it was covered a lot of information, everybody, and our brain as human beings is not capable to store and organize all of this information. Believe me, talk to somebody tomorrow, you know, you are going to forget 80% of what we just told today. Oh, I'm not for. Yes, you will. This is science, okay? So watch this webinar, everybody, 3 or 4 times, just to remember, you know, and structure your mind on what should you be looking for, what are the important things.